Give us a little optimism. Even if you don't have it or feel it, pretend. We need to hear it to kick off July. Why not?
Yeah, no, thanks for having me, Brian. I do have optimism in the fourth quarter. Last time we spoke in April, I said that the market wouldn't see any sustained uptrend until the Fed stops or at least pauses their current rate hiking cycle. Now, since then, it's been an ugly downtrend. We've had some bounces, but they've all been short-lived. But I'm sticking to my call that we won't see any sustained upside until the Fed verbally announces that they are pausing their current rate hiking cycle. Now, the reason I feel an announcement's important is because when you look historically at past corrections, we tend to come out of them when the Fed has a shift in policy. Three quick examples. We had a correction in 2010, and it wasn't until Ben Bernanke, the Fed chair at the time, on September 1st, came out and announced QE2, providing liquidity and a launch for a new uptrend. Fast forward to the fall of 2018, the Fed was also raising rates, and we had a correction then. It wasn't until Fed Chair Powell came out in early January 4th of 2019 and said the Fed would be patient on interest rate policy. And of course, most recently with the pandemic, it wasn't until the Fed provided that insane liquidity and accommodation that led to a sustained uptrend. So bottom line is, market participants need to be patient until the Fed announces a shift in policy.
And when's that going to be, Joe? I mean, I only half joked on the program the other day, and I was only half joking that when do we start talking about Fed rate cuts? I know that sounds ridiculous, but at some point they're going to send this economy into the tank to kill inflation. They're going to have to make that pivot. When do you think that all-important pivot to a dovish Fed will happen? August, the end of this year, early next year?
Yeah, I think we just need an indication that they're going to pause this current cycle. There's two meetings coming up. I think best case scenario for the bulls would be the next meeting in July, where maybe they raise 75 basis points, get Fed funds somewhere between 2 to 2.5 near the highs of 2018, and then they pause and say, we're going to be patient and let the recent hikes filter and absorb into the system. My likely scenario, though, is at the next meeting in September is when they'll do it for two reasons. Number one is they don't want to look like they're interfering with the upcoming midterm elections. And the second reason is that midterm election years tend to bottom statistically and historically around August, September. So that's the time where I'm looking for a pause and for some a sustained upside for the fourth quarter.
We like to call them Opportunity Fridays here, try to leave people going into the weekend with some investment ideas. The one thing COVID did, it made us forget that there's a lot of other bad things out there that we need to solve, whether it's cancer, whether it's a host of other diseases. We kind of forgot about them for about 2 years. We need to put them back on the front burner, and I would imagine that's one reason that you think that biotech, which is down by 50% as a sector in 2 years, is probably a good long-term bet.
Yeah, for exactly the reasons you mentioned. One way to play it is with an ETF, XBI, for example. I like it for three reasons. That the relative strength, meaning that when the market made a low in May and made a new low in June, the XBI held up better. So it's showing that it's absorbing this correction better. Second reason is a lot of biotech stocks are approaching at least near-term 52-week highs. And the third reason is that big pharma, their balance sheets are pristine. They have tons of cash on hand. And I think you're going to see in the second half of the year, biotech outperform, led by some M&A from some of the big pharma. We've already seen it earlier this year, and I think we'll continue to see it into the second half.
Joe, you think the best way to play that is, listen, you can bet on a biotech stock. Biotech stocks do go to zero. I mean, if they have a high flyer in one drug, it doesn't work out, the stock has no value. It's a risky segment. Best way to play it, just the XBI, sort of a wide-ranging ETF?
Yeah, it's equally balanced. XBI is one, IBB is another one, but that, to your point, it takes out the single stock risk, so it's a way to play the overall sector.